Okay, I'm going to go through a couple things from this morning's price action. Um, let's close this off for a second. Eliminate the expectations. We'll talk about them in a minute. So we had all of our original volume levels that we had been taking a look at, except for we added the Monday previous day levels, so Friday's levels, into our old volume levels, and it's just something we'll keep an eye on. You can see them flashing on and off here. We'll keep an eye on those as we come back up to them, and if any of those remain applicable, we can always use them, but essentially they're encompassing other levels, so I'm expecting the higher time frame levels to be respected as well. So we added two different levels to this array here, and that is the Monday swing levels and the Monday daily range levels. So the Monday daily range levels are shown here, and that fixed range profile can be viewed here. So from here to here gives us three different levels: low, POC, and high. I've marked those out with these three levels here. And then shutting off the range, we had one more that we looked at. So because all of those levels were so much higher than where the price action was at, and also noticing that we had a swing leg down here, I took a look at pulling a profile from here to here, and the reason I did so was when these lows were broke, this was the last high that was put in before we broke those, and then as we made a series of lower lows, we didn't break any, we didn't start to break highs until a minimum of this leg, but then you can actually see later on in the day. So this was all, we'll replay from up in here because this is when I start my trading. But you can see we've actually put in a slightly lower low, so encompassing this volume for the swing leg wouldn't be inappropriate. But before we got to that point, sitting at 3 o'clock, let's erase our price action so we're looking at the same thing as I did in the morning. We had this swing leg range here, so labeling it as Monday's PM swing range because it happened in the PM session, afternoon. We've drawn in these levels as well. So I didn't draw on the low because at this point we had already broke the low, and then broke back below it here, so we weren't really respecting that lower level at the time being. But I started to set up, so I had my levels set up for my morning that I was going to watch. These are the new levels that were added in, and then I had all the old levels that we had from before. So just turning on the newest levels that we're going to look at right at this moment. We had these sitting here. I had my original top-down analysis drawn, and you can see that we had equal lows that we were looking for all throughout this week to be taken out. We had that aggressive Thursday move down that set a lot of traders offside, and then we had a whole bunch of consolidation price action. We finally, over Thursday to Friday, made a swipe of the trendline liquidity that you can show here from my purge liquidity line. So seeking lower levels made sense. And then you can see throughout Friday, we had a push down, and then yesterday's price action finally gave us a break of those lows. So we retraced up approximately 50% of the price action that was put in on the Friday. We balanced that price range, and then we got to move down. And I believe it was also the previous week value area high that we ended up getting a reaction from. We had a minor reaction off of the POC, and then the ultimate high was off of that level, which was also a Sunday open level. So double confirmations coming in there for the short in the afternoon, or early morning, sorry. Anyways, we took out these equal lows, so we've balanced the equal lows that we had here and the price action that's been put in. We did break this original trend line lower, so my higher time frame bias is to the downside now, but we want to keep in mind that these are relatively equal highs that we put in up here, and that this trend line that we broke above, we didn't break above it by much, so it's very possible that we revisit these highs at some point. So when we get there, we'll talk about it. So talking about this morning's price action coming in at 3 o'clock, we had slowly started to make a trend up, so we had some upsloping trend line liquidity down here that could have been viewed, depending on how you draw your trend lines. But I was looking at this as potentially being deviated, and then we have a long wick here that I expected we could come down and see broken. And then for you that have followed what I talked about before, I always have my expectations for my morning level. So I like to see the Asia liquidity swept, and I like to see the opposite side of the PM level swept first, and then reaching towards the PM side. So this blue box here represents our PM session. I like to take it on the 4-hour time frames. So looking at it on the 4-hour time frames, our Tuesday expectations would have been drawn like this. So we have the high of the 1800/2200 candles here, and the low is put in down here. So there's my Asia high and low. And then I look at the high or low of the 2 PM level that put in. We made a push down, and then from that PM session we pushed down lower. So I'm looking at the highs because you can see in hindsight we've already swept the lows, right? Because we've swept the lows and we have this liquidity down here, my expectation for the day is to essentially retrace and take out the lows of this before moving up towards the PM session. So I'm looking for this move to happen, because when we come in first thing in the morning, I see this trendline liquidity being generated. I'm expecting that it's a potential that we're going to get a reaction off of a level just to move down and to take this liquidity, and then potentially set this up at the end of the London or beginning of the New York session. So we'll go over positions that I saw there. So we had our previous day session liquidity that we put in. We also had the swing that we spoke about. So let's turn these levels back on quickly. I'll turn the fixed range off. So we had ignored the value area low for the time being. We pushed up to here, and before coming down and making our higher low. But as we came up and got a reaction off of our swing POC, there was a potential short. This is also double confirmation with the daily open, this yellow line that's here. So we can see on our 5-minute time frame that we came up and first wicked in respect to that daily open. We got a candle flip, but then we pushed a little bit higher with our wick, touching into the swing POC, but the body closed down below the original test of the daily open. So as this 5-minute candle pushed down past the opening of the flipped candle, or sorry, the close of the flipped candle, you could have had a 5-minute entry. I outlined that here, but a little bit more minute, or the way that I take my entries, I like to, so I'm looking at this developing, so as it develops, as this 5-minute candle wicks, I'm looking to see if I can get tight entries in the wick that I can hold for the close, and depending on how things are looking, you can take profits here, but essentially you're holding for that 5-minute entry position. So we would have been looking for targets to come down to, at a minimum, 50% of the dealing range that we had been given, so down to here, and you can see that we had where is it? We had a swing high here that we broke, so we have liquidity sitting underneath this point. So anything that deviates down here and gives us signs of reversal could be a reason to take profit. Otherwise, we're holding for lower prices. You can see we had a swing high here taken out by this move. So the lows that are sitting down here is also right in the middle of our golden pocket. So if we see deviations and stuff, divergences and stuff underneath these lows, that would be a potentially TP1. Otherwise, holding to come down here and reach for these lows with divergences would be TP2 or TP1, depending on your circumstances. And then the final target would be this Asia lows. So looking for those to be swept and then get a reversal back up to the highs. So as we respected these levels and we got our potential 5-minute entry 1, model entry 1, we could have also looked at entering on the wick, and I do that by looking like this. So as we come up and we started to put this wick in, we were making a divergence because this high is represented with this wave. You can see that these highs are much lower than that. So if we are going to get the rejection at a hold and we get the red dot in a prince, there's going to be a bearish divergence here. Let's just draw it in. It's better for representation's sake. So between these two highs, we're doing the opposite of price action versus momentum. So there's our 5-minute bearish divergence. And then as we came up and we made this high, and we're seeing that divergence forming, looking on the 1-minute time frame, when we broke these highs, when we broke these highs originally, you can see divergence is starting. And as we made this subsequent secondary high, it would have been nice to have seen a divergence between these two highs, but we can observe a divergence between these highs. So this larger divergence is still applicable, it's just not as strong as seeing it locally. So can't take an entry off of that, we gotta dive down a little bit deeper. So we've already accounted for that larger time frame divergence on the 1 minute. So we're looking to see what these smaller time frames do. So between this high, which was the original high that we looked at on the 1 minute, we're getting a divergence. This high right here, let's circle it so we don't have to keep going back and forth. So between that high and the first high that was put in here, you can see we have a divergence on our 1 minute, or on our 5 second. And more locally, which is the more powerful signal between these two highs, or these three highs, you can see that the momentum is flattened out and started to diverge. So we didn't get the higher highs in that momentum. So as we broke market structure, which this is a swing low, we gapped up, we put in a swing low and then made a higher high. This swing low could have been taken as an entry point. And you could have actually had a subsequent entry, because if you pull from the highs down to the lows, if we revisit an imbalance into this area, that's also another entry point for myself. I was taking these originally as my only entry, but I've noticed that sometimes with strong momentum, we get a large push right off the bat. So breaking the market structure, as long as the market structure is not way down here, you can see we've had subsequent higher lows put in. So breaking that market structure has been my entry 1, and then if I get the secondary, I sometimes do an add. So we'll take this break here as entry number 1, which I've already got marked out. And then I add $2 onto the top for my broker spread. But you definitely could have looked at a secondary entry. So we had a push up with a candle close, and then we gapped up to this bearish candle, and then we pushed down. So that gap inside of there could have been taken as an imbalance or an entry. You could have looked at this fair value gap here, but I don't like the fair value gaps to overlap the 50%. I like the imbalance to sit entirely in its entirety above. So this volume imbalance sitting up here could have been taken as a potential second entry, but did not look at that as I was already into a position. So this could have been, we'll just call it my ad for the sake, but I didn't add there, as it was already a tight enough position. So we would have had same targets, which would have been our looking on the 1 minute time frame from the swing low to the swing high that we put in. Under 50%. We notice that right above 50%, we already spoke about the fact that we broke a swing high here, so there's liquidity sitting down there. So if we were to come down without tapping the 50% and get divergences, it'd be a reason to bring some profit off the position, moving stops to break even. And looking at forward price action, you can see that we got you can see that we would have got at least TP1, so it depends on where you take it. I looked to take a profit here as we put in this red vector candle. So we had red vector candle here that I was waiting to see if we recaptured, and then we had a second one. Our second one came in as we broke these lows. So take profit 1 sitting there as we recaptured it. I think I had it drawn already below. So it could have been a potential take profit 1. And then let's just label this. Could have been the same thing with the 5-minute position that you could have had. And then DB2 looking for, I don't know why it's not marked in this time frame. Let's quickly fix that. Looking for that Asia low. So we spoke about sweeping these lows and putting in divergences and such, because the majority of the liquidity would have been sitting below these lows. Obviously, ultimately, reaching those Asia lows is our target, which you can see we just barely did by a sliver. So that would have been the ultimate TP, or the terminus for the profit. Oh my goodness, that would have been the ultimate terminus for the position. But sweeping below these, you could have seen another opportunity to take profit. We did have local divergences starting to happen. So there would have been reason to take profits here too. So as we came down and didn't break structure there, but we ended up breaking structure over here. So you could have said to take off more here somewhere. But ultimately I was holding for the idea of hitting out that Asia low, which we just barely did here. So as we came down to that Asia low, we started to put in divergences. You can see those here. I'll just outline the most obvious one at the bottom. Although I think we did have them on the higher time frames. Yes, so we have 15-minute divergences here. As we came down and swept that low. Or sorry, that was 5-minute. All over the place today. But for the sake of conversation, you actually had it on the 15-minute as well. So 1-minute divergences and coming down to our 5-second. So we're basically doing the opposite of what we do for our entry technique. You can see we had, so there's actually additional confluence here. So we put in these lows and we broke the highs. So from the lows that were put in to the newest high, we had a consolidation area here that we deviated below. So we manipulated the highs and we expanded down below them on a smaller time frame. But on the, I think it was the 1 minute. Let me see. No, maybe not. It's not as obvious. Would have been cleaner if this had happened before. The fact that we had a little tiny deviation up there wasn't as great, because you could have said this was a consolidation, manipulation, expansion with a retrace. But anyways, getting off track, just trying to build confluences as I see them. We have our divergence down. We had a bit of a consolidation happen and we dropped down below it. I guess you could have also looked at this, right? So we broke highs and we put in this high and we came down. We never came back up above that, but we did sweep the lows, right? So we've manipulated below this consolidation into that Asia low. So there's lots of confluence saying that this could be the bottom of the range for the morning, or at least for a short period of time. So deviations are all showing up down here as we made these lows. And then the most local one can be seen between this low and this low. So 5-second deviation. Divergence, sorry. And I believe I left this on my chart too, yeah. So This entry could have been taken off the break of the structure here as we made this move. This stops at the low, minus $2. I do this on my phone, so it wasn't as accurate. But breaking that structure would have been the entry, and then looking for the secondary entry at the 50% retrace. So we didn't get any 50% retrace here. Pulling it up higher. We did get a 50% retrace here. Did we have an imbalance sitting underneath of it? I didn't mark this out because it didn't take an ad. We didn't get the one that I would have wanted to have seen, so I wouldn't have had an ad in this position at this point. So no ad, just the break of structure. So this is why I started adding the break of structure as my entry points, because sometimes you don't get that retrace or an imbalance that shows up into the retrace. So because we did hypothetically rebalance 50% with this move, but I don't like the imbalances that are. I would have liked to have seen an imbalance below 50%. So you would have had to look at like that imbalance as an entry, but it doesn't meet my criteria, my minimum criteria for that add-on. Anyways, so we would have had our final TP terminus here. Could have potentially had some held for lower, but if you remember from the beginning of my explanation, I was looking for these Asia lows to be taken out, for us to diverge and start breaking structure to the upside, and then getting a move to the Asia high and potentially the PM session high that was put in from the previous day. So, might as well let me retrace. Gotta fix this Asia low because it's gonna drive me crazy. Snapped off this low point there. Okay, so we got our Asia low wipe, so let's change this to a dotted line. We had all our divergences here, stacking up into our long position. To our long. Take the shorts off for now. Take all this off. Try to clean up the chart so we can keep this going. I want to keep all this on for my review for later. These are the short bias deviations. We'll label those after. So I like to keep all this on. You can see I've got the older stuff from before. I keep them on all week long, and then I do a week review. So I'm going to try and start recording those, but my time has not allowed me to do that lately. But it's important you do them for yourself. So closing all this off. So you could have, I traded this as when we broke this, my trade was closed because I was looking to take longs out of this. But it's reasonable to say stops to break even and leave a tiny runner on. But if in that case, you can see in hindsight that we came up at the beginning of the New York session. I would have stopped out that position, came with the 5-minute position. The break entry would have been here. You would have triggered that at the 7 a.m. So we're just going to eliminate those for the time being to make it easier for conversation's sake. And remember that we got that reaction off of that POC and daily open. So in hindsight, I don't have anything marked out here. I didn't have any levels, volume levels that I saw applicable for this pull. But what you could have said was, I believe, I'll try to jump out and do this on the fly here. So we came down and got a reaction in this daily order block. I think it was this thing. No, it wasn't that thing. Where was it? There was a range I was looking at, and I didn't mark it out. To this PLC, but I don't think it was on that one. So I'm looking at the larger to see if we got reactions off of them. highest, doesn't matter. But you have larger time frame volume levels that you can use as your confirmation here. There was a larger macro fixed range. But getting off track a little bit, looking back at this 1 minute position long that we had opened, we spoke about the ultimate idea. I don't know why these levels are not showing up. We spoke about the ultimate idea is for us to come up and touch the Asia high and the PM levels. So looking on a 1 minute time frame, more local, because it's always possible that we get this move and then we come back down, make another lower low, right, with divergences. So trying to lock in profit early is important. So pulling from the swing high down. You can see we took out these levels with this last high, and there's equal highs there. So purging up through this level could have been a potential TP1. Stops move 2 break even. We've been pulling it at roughly 1 hour. And then these smooth highs are put in up here. If we got a reaction, it could have been TP2. Holding for your Asia though. So the way that I had played this position was I was into good profits by the time we got into the short. So holding to see, like if I had a market structure break in around here, I would have pulled more out the position, but we didn't. We kept moving up higher and higher and higher. Didn't get a reaction of that POC originally, and then we came up and took Asia. So as we take Asia, we have TP1. So as we take out that Asia high, there's TP1. So there's your TP1, 50%. And then we can see in hindsight that we've now got, in the last little bit while we've been talking, that TP2 would have been hit. But TP1 would have yielded you about 2.5 hour. And then we actually did get a reaction off of swing value area high. So it would have been totally applicable to say, as these medium time frames started to respect that up here, the value area high, to pull more off the position makes sense. Keeping stops at break even. So could have played this a couple different ways because TP1 was over 2 hour pulled out. It would have been reasonable to keep your stops at the bottom because even if we got knocked out, it would have only been a 0.5 hour loss, whereas you would have been up at least 1.5 hours still. So keeping that extra room to keep you in the position could have been applicable, especially with this imbalance sitting here. But you can see after we respected this and got our push down to the imbalance, we then got a sharp move up, a new higher high, and then a higher low, and then that's where we're sitting right now. So I believe we've balanced the price range for the time being, and we've got imbalances up here with the that are in conjunction of the PM high that we could use to find a new consolidation area to then move back down. But I ultimately think that we're going to end either the day or the week up higher to take out some of these other levels that we had up here, like the previous day value area low, POC. So those are my ultimate targets. But the Tuesday expectation, by this point now, my expectation is met for the morning session. So we had a consolidation coming out of Asia. We dropped down, we took the Asia low. Then we expanded up, taking Asia high, and then we've continued up to the PM level. So there's my entire expectation for that met. So I didn't play this level, this position, due to time constraints and stuff. I wasn't able to trade all the way through. Like I said, I was marking this out on my phone as I was going to work, but reasonable TP2s could have been taken anywhere in between here, because you had your TP1 lock in, so it makes sense to just hold for this ultimate terminus as your TP2. But seeing the reaction off the value area high, especially once we purged lows and it came back up and reacted again as we broke structure there. So you could have said, as we broke structure here the first time and we came back up, the moment we started to respect there, taking TP2 totally would have made sense. Because we're looking on such a low time frame that, write this out for a second. Let's fix our timeline so it's a little bit easier to talk about it. You would have started to see like 15 minute, and so say we had one wick and then we had the second wick. So as that second wick happened, it's very easy. It was very reasonable to consider taking more profit off of the position, because we could be seeing an extended move down. And then the higher up in time frames you go, you can see that they're all respecting it. So there's your second wick on your 1 hour, and then we ended up getting a candle flip out of it, right? So that first wick, second wick could have been your TP point, candle flip down, and then potentially looking to hold down for lower prices. But in hindsight, you can see we got we had to move up and we broke those lows. So you could have had a short here, stop above here, reaching back down into some of these lower levels. And then out of curiosity, if we had it pulled, yeah, there you go. So you could have traded it down to the POC. So between here and when we broke out of the range here, you had value area high and a POC. We'll just take that. Don't include this large volume candle coming out of here, but yeah, some levels you could have looked at for sure. But anyways, I wouldn't have looked to get in that type of position, because my morning expectation with the Nasdaq would have already been met at this point. So with current price action, expecting a push up into this imbalanced candle makes sense to me, and then seeing how we react in the afternoon. So the 2 p.m. liquidity injection could see a reversal or a continuation. So watching how the volume levels react would be how I would judge the rest of my day. But yeah, just back to the end of this, and just to finish off my position for my recapping on the end of the week. It would have made a lot of sense to have taken TP2 here. So I'm going to mark that out. TP2, which would have been approximately 3R left on the position. So you could have had another 1.5 out there. And then as we breached that PM level, it would have been my final take profit. I'd been practicing with relatively small positions, so there probably wouldn't have been any left on for me to half again. So taking the remainder of the position off would have been what I had done. But if you had been in a position where you could have taken profit 3 times and had a runner, then it totally makes sense to have TP3 here. We're going to say 100% because that's what it would have been for me. So 100% remaining, and then if you had position left, you could have been holding for that imbalance. So we've got levels up here. We have the previous daily levels. We have the Sunday open level. We have imbalance that's left above here too. So even just coming up and then seeing us create, maybe we do a consolidation with a manipulation up. So that could have been another final terminus for this position. But that's probably how I would have played it if I had been into it. Although it's always easy to talk in hindsight, right? But it's important we do this. The more repetition you get with this, the more your eyes see it as it's happening. So Tuesday expectations, and then just cleaning my levels up later on. Okay. So I like to label all these so I know what I'm looking at later because it gets confusing. So this was my TP range for my long, where we looked at taking our 50%. And then moving into our afternoon now, we could say stuff like this developing daily range that's happened from this open to where we are now. We've got volume levels below us that could get respected before getting moved higher, or vice versa. We could see them lost and then get the bottom side of them respected for potential lows to take out these equal lows, because even though we did pierce this Asia low, we didn't get a candle close below it. So we've got now new relative equal lows here that can be looked at, similar to what happened here that we saw run through after days and days and days and days. So we had these relative equal lows that were put in, and then it wasn't until like a week later that we saw those lost. So we're gonna write this in as Tuesday range, and we'll update that tonight as we get the close and open for the new day. I'll leave it turned on because it's current. And then we likewise also have our developing weekly. So from the Sunday open to where we're at right now, the POC actually lines up with the POC for the day. So it makes sense that if we're going to continue to bounce off that level or get deviations above and below it, as there's a lot of volume that's happened there. But you can see we have very low volume nodes. So these imbalances up here are going to get filled at some point, I would imagine. And we've got our developing weekly value area high there to take a look at, which is right in the middle of the cluster of our previous day value levels. So, handful of levels to take a look at and watch throughout the remainder of today and the week. But at this point, I'm expecting higher price action. You can also see we're getting that nice curvature, which usually indicates more upside to come, especially because we've taken out lows. So that would be my expectation for the rest of the day. But I'm going to admit some of the weaknesses that I identified last week in last week's price action was trying to trade too many sessions. Because ultimately every session has its own profile and different reasons it said it's going to reach for levels. For example, Mondays are usually consolidations, but we could see in hindsight that yesterday's Monday was an expansion. So it's reasonable to believe that over the course of today and tomorrow we could see the consolidation setting up for the rest of the week. So because there's already been moves pulled out of here, I don't know if I would be looking to take any extended moves right now, at least until we get a move up into these volume levels, or a move back down sweeping these lows again, and giving us some reason to think that we could reach up for there. So that's it for today's recap. Thanks for listening.